In this video, we're going to talk about what Section 179 is, how it works, and why it's important for you to know about it if you have your own business. Make sure to watch this whole video from start to finish, because at the end of this video, I'm going to be showing you some examples on screen of how this deduction works and how you might be able to reduce your taxable income. What's up, guys? It's Mike and Chipper.
I read you.
If you're new to this channel, I just want to take a moment and say welcome. Highly consider subscribing, because every single week on this channel, I produce new videos that's going to help you with your finances, your taxes, investments, and things that's going to help you with your career and your everyday life. Okay guys, today I'm going to attempt something crazy, which is to try to explain the Section 179 deduction in plain English. And this video was actually requested by one of the subscribers of this channel. So Jeff, my brother, I just want to give you a big shout out and say thank you for recommending this topic. This is a very cool tax topic to be talking about. It's often very complicated, but I'm going to try to break it down into plain English. Obviously guys, I can't take every request that you guys give me, but I felt that this was a really important tax topic for you to know about, especially if you own your own business or someday you're thinking of starting your own business. This can really help you. And if you're not an accountant, I understand a lot of you who watch this channel are not accountants. So, why should you even watch this? Well, if you really want to know some of the tax deductions business owners have, this is one of the best ones to know about. So to produce this video, I had to write a series of notes, and good news guys, in the description section down below, and I'll also put it in the comment section down below, I'm going to include a link to the document I typed up that gives you a basic summary of the Section 179 deduction, and I've even included on that document a direct link to the IRS Publication 941, which is like the Bible of depreciation, which can be found on the IRS website, and it will cover all the nitty-gritty details of Section 179. In this video, we're just going to cover the basics so that you have a general basic understanding of what it is and why you would want to use it. So let's start with why. Why do you want to use Section 179? Well, if you're a business owner, or like I said, maybe considering becoming a business owner someday, Section 179, which is a tax deduction, will allow you to reduce your taxable business income. And sometimes I've seen it reduce people's taxable income in their business all the way to zero. So at the end of the year, they pay no tax and it's completely legal. Okay, so what is Section 179? Section 179 is actually an election that allows you to accelerate the depreciation on an asset. And you're like, what the heck? I probably already lost you guys, or maybe lost most of you. So every time I say the word depreciation, think of that as an expense. And an expense in a business does what? An expense reduces the taxable income of a business. So when I say the word depreciation, think of an expense, especially if you're not an accountant. That will help clear things up here. And when I say eligible assets, which I'm going to be using that term a lot in this video, what I mean is that every business, or most businesses, they need machinery and equipment to run them. So there's things like they might need computers, they might need software, they might need heavy machinery if they're a manufacturing facility, right? There's going to be land, buildings, other types of assets. So just assets that we buy when it's like equipment and machinery that you can use to operate your business. So in general, that's what we're talking about when I say the term eligible assets. You'll see as I progress through this video that accounting is like a separate language. So I'm going to try to explain it in plain English along the way. Hopefully I haven't lost you already. Okay, let's continue. Okay, so that's what Section 179 is it allows us to accelerate depreciation on an asset, which allows us to take a greater taxable expense deduction on our business tax return. So in general, the reason we're talking about 179, just big picture here guys, is so that we can reduce our taxable income and pay less tax, so we keep more money in our pocket, and that's the whole reason we're talking about this. Now I will let you guys know that you cannot use Section 179 to drive your business income into a negative number. You can only reduce it to zero, so keep that in mind. Guys, and as you're watching this video, I understand this stuff is maybe confusing, especially if you're not an accountant, but if you have questions or comments, please leave them in the comment section down below, and I'll make sure to get back to you. But I'm also going to really refer you as well to that Publication 941 by the IRS, which will answer many of your questions and really gets technical if you need or want that level of detail. So who can take the 179 deduction? People who own a business and purchase property that is used for business purposes. So when can you take the Section 179 deduction in your business? When can you take it? You can take it as long as you have eligible assets, things that would qualify for that deduction, and you use the Section 179 deduction within that tax year. So the year you buy the asset is the year you have to use Section 179 on that asset. Because once that year is gone, you can no longer take it, and the asset will depreciate over time. So what property qualifies for Section 179? Here's some examples. Machinery and equipment, property contained in or attached to a building other than structural components such as refrigerators, grocery store counters, office equipment, printing presses, testing equipment and signs, gasoline storage tanks and pumps at retail service stations, livestock, yes, livestock, like horses, cattle, hogs, sheep, vehicles used in a business. You can take Section 179 up to a certain amount. Usually it's up to $25,000 per vehicle. However, some vehicles that weigh over 6,000 pounds, you might be able to expense the entire thing in that year with using Section 179 if that vehicle qualifies. There's all these rules about different areas of business concerning Section 179. So you just can look at the publication if you have additional questions. Okay, what are some examples of property that would not qualify for the Section 179 deduction? Here are some right here. Assets purchased and placed in service that are used to generate rental income. So if you're a real estate investor, you cannot take 179 deduction. No. You cannot. That's one downside. You still get to take normal depreciation, but you cannot accelerate it using the Section 179 deduction. Other things you cannot take Section 179 on are things like building, land, lease property. There are some instances where you can take Section 179, and there are other instances where you cannot take Section 179. So you just need to look at the rules, look at the publication to see what applies in your situation. Are there limitations on Section 179? Is there a limit to all this? Yes. Currently, the limit is $500,000 in each year in terms of how much Section 179 your business can take. But that's subject to change every single year. It always changes going, from year to year. You never know until Congress passes the laws. I'm sorry, guys. I totally messed up on the publication number. This whole time I've been shooting this darn video, I've been saying 941. Well, the publication you want is IRS Publication 946. 946. That's the one you want. You don't want 941, but I have the link in the comment section down below. Sorry about that. Okay, let's continue. Okay, so you may be wondering, well, what if I can reduce my taxable income to zero using Section 179, but does it carry over if I can't use it all? The answer is yes. Whatever amount of the Section 179 you use, that, obviously your income for your business cannot go below zero, that amount of Section 179 will carry over to the next year for currently, as the IRS code states, for an unlimited number of years. Okay guys, now we're going to take a moment and take a look at a simple example on screen. I'm just going to pull up an Excel document and show you a picture here. I thought about using the whiteboard, but I don't have the best camera equipment here, and it's going to be much clearer if I can show you a physical picture on screen, so let's look at it right now. So in this simple example, what we're looking at is a new computer. So a new computer is purchased on January 1st of 2017, and to simplify things, I'm saying that this computer costs $10,000. I know most computers don't cost $10,000, but in this example, we're using that number just for simplification purposes. Okay, let's take a quick look at an example of how depreciation would normally be calculated on this computer without using Section 179 at all. By understanding this, then you're going to be able to see how big of a difference it is later in the video. So let's take a quick look. So I understand many of you aren't familiar with depreciation, but so every type of asset there is, whether it's a computer, building, land, has a depreciable life. And that depreciable life is assigned by the IRS. So over here in this little table, this little chart, I've pulled this information from the publication itself. As you can see, I've highlighted 5 years. So for a computer, it has a 5-year depreciable life, which means the IRS says, the rules state that we must expense the total cost of this computer over 5 years. And so that's what we're going to do now over here in this calculation. So let me show you how that's calculated, how we calculate normal depreciation without using Section 179 at all. We bought our new spanking computer that's just completely awesome for $10,000 on January 1st of 2017. We bought it for $10,000. Depreciable life is 5 years. We know that just because we just looked at that chart. So 5 years obviously is 60 months of depreciation. We're in our first year here, right? So we bought our computer on January 1st, and during the course of the entire year, we've taken now 12 months of depreciation, right? Because we've had the computer for one whole year. So now we have to calculate the depreciation expense over 12 months. So what we do is we take one full year of depreciation, which is 12 months, and that means we can depreciate 20% of the cost of that computer. And the way I got 20% in the first year is you just there's two ways to look at it. You can do 12 divided by 60 total months, because there's 60 months in 5 years, or you can just take 1 divided by 5 years in this case, since we've had it for a full year, which probably that's the easier route. So 20% is the amount we're going to depreciate in the first year. So what we do is now we multiply 20% by the total cost of that computer. So 20% times $10,000 gives us a $2,000 depreciation expense, normal depreciation. So each year, if we weren't going to use the 179, we would be able to deduct $2,000 of depreciation expense each year up for 5 years on this computer. So let's apply a real world example now with that. So knowing that our depreciation expense in this case is only $2,000, if we had a business, as you can see on screen, that made $10,000 after all normal expenses, but you notice there's no depreciation expense yet? Now, if we add that depreciation expense, it's going to reduce the taxable income of that business by another $2,000. So instead of paying tax on $10,000 of taxable income because of depreciation, now that business is only going to pay tax on $8,000 of that income. Okay guys, now let's look at the same scenario, but using Section 179. If we pull into play Section 179, we don't have to wait 5 years to recoup the cost of that computer. We can fully deduct the entire amount of the cost of the computer in that year. So instead of getting only a $2,000 deduction for our business, we get a $10,000 depreciation expense deduction.
Damn!
And so what happens is, looking at that same business now in this different scenario, that business that had $10,000 in taxable income before depreciation expense, now we pull in this depreciation expense that we've used Section 179 on. We fully depreciated the cost of that computer, all $10,000 of it. So we take $10,000 of income minus the additional $10,000 in depreciation expense. And so for that year, that business taxable income has now gone to zero. That business owner now has to pay zero tax on whatever income they made in their business. Now remember guys, that was just one example, but let's say you went and bought another computer for $10,000. Well, the Section 179 limit was what? $500,000, right? So you could expense that full thing as well, as long as you had enough taxable income in your business in order to deduct it, because like I said, you cannot use Section 179 to drive your business income below zero. Now, are there any downsides to taking Section 179? And the answer is yes. One of the major downsides of expensing the entire thing using Section 179 is that Section 179 would reduce the cost basis of your asset to zero. So that computer you bought, you depreciated the whole darn thing, so now your cost basis goes to zero, right? So if you ever sell that computer, whatever money you get or receive, let's say you sell that computer later on for $5,000, let's pretend. You're gonna have to report $5,000 in income on your business because your cost basis is now zero because you have fully depreciated the cost of that asset. The second downside of using Section 179 is you should be thinking about where's your business income headed in the future. If you expense everything in the current year, you have to ask yourself, am I gonna have any other deductions in the coming years when I have even more income? So you might have reasons not to take Section 179 in the current year, but for the most part, what I see in the real world is people usually do elect to use most of their Section 179 deduction all in the first year. The thing I forgot to mention, guys, is that you don't have to use all the Section 179 deduction. So you do have discretion of how much of the Section 179 deduction you want to use on each asset. Okay guys, that was a basic overview of how Section 179 works. Where do you go to learn more about this deduction? Well, like I said, go to IRS Publication 946. I'll have links down below, so make sure to check it out. There's over 100 pages of written information with tables, graphs, etc. of how the Section 179 deduction works and how it might help you in your business. save a lot of money in tax. All right, guys, I know this was a lot of information to take in, especially if you are not an accountant. So if anything did not make sense, let me know, please, by asking questions and comments, because it's hard for me to explain this stuff. So I might not have explained it in a way that you understand, and that is completely fine. So just drop any questions, comments down below, and I will make sure to get back to you. All right, guys, if you liked the video, make sure you smash that like button to let me know you liked it. Share this information with a friend, especially somebody who owns their own business, who's in accounting, or just trying to save money on tax. And of course, if you're not already subscribed, be sure to subscribe for our future weekly uploads, because every single week on this channel, I do my best to produce new videos that are gonna help you improve your financial position, your career, and your life. I love you guys. Thank you so much for hanging out with me today and talking about tax stuff and accounting stuff. All these crazy rules that are out there, but they are relevant and can save you a lot of money. I love you guys. I thank you so much for your support on this channel. And until next week, I will see you in the next video. Have a great week, everybody. Love you all. Peace.